Welcome back to my trade journal videos. This is trade journal number 12. I'm going to go ahead and start off by talking about the trades from this past week, and then I'll jump into the trade that I'm currently in for next week. So for this week, the first trade that I took last Friday on October 9th, I believe, so that would be right about here, was selling a cash secured put at the 115 strike price, which you can see by this red line right here. And I sold this cash secured put for approximately $196 in max profit. And as you can see, Monday morning stock price jumped up, so I was instantly, having the ability to buy back this cash secured put for a good amount of premium. What actually happened was I closed this trade out on Tuesday. Might have been better to close this out on Monday, but I closed this trade out on Tuesday for around 80% of the maximum profit, so $158 in profit. And as you can see, I could have held the trade throughout the rest of the week because Aapl did finish above my strike price of 115, and I could have made the 100% of max profit, but I wanted to use that money for a different trade that had come up during the week. The other trade that I ended up taking last week, or this week actually, was on Pton. So as you can see, Peloton's pretty much just been on this really strong upward trend, definitely a little bit overextended. But the trade that I took here was also on Tuesday after closing out the Aapl trade. So that would be on 10/13. So that would be right here on this candle. I basically took a trade which is a covered call. So I bought 100 shares at 130.91. So let me go ahead and put a line in there for that. So I bought 100 shares at 130.91. As you can see right there. And then I sold the covered call, or in this case just the call, at 131. So like right above the price that I bought it at. But I was able to sell that call for $328 in max profit for premium. So as soon as I sell that, I get that money. And if the price finishes below that point, I just keep that premium and nothing happens and I get to keep the stock. However, if the stock price finishes above 131, then what happens is I get assigned and basically my 100 shares gets taken away and sold at 131. But in that case as well, I get to keep the $328 for selling that option contract. And as you can see here, the price kind of stayed very close to 131 kind of throughout the rest of the week. And what happened was, right here at closing on Friday, the price was extremely close. So I went ahead and bought back the call contract and closed it for $307. So I basically was able to make 93% of the max profit. And kind of jumping into the trade for next week, I sold another call option at the 131 strike price for $535 in premium. And the reason for the premium being higher this week was because volatility on Peloton has picked up, as well as we're getting closer to their earnings date, which is on November 3rd. So the trade for next week, if Peloton finishes above 131, then my 100 shares will get taken away and I get to keep the $535 in premium. On the flip side, if Peloton starts to go down, I still get to keep the $535 for selling the contract, but I would then have to buy the shares at I still have the shares at $130.91, so I will have some sort of loss, but I can continue to sell call options against it. So we'll see how this trade plays out. It'll be interesting to see kind of what the volatility in market looks like next week. If you have any questions or comments, feel free to leave those down below, and don't forget to like and subscribe so you can stay up to date with all of my trades.